Good afternoon, Dr. Seetharaman, Doha Bank Group CEO. As part of our regular economic commentary, we would like to hear from you on the latest economic developments happened last week. In one hand, the US Federal Reserve surprised with not tapering, and in the other hand, new concerns have raised about how the US shutdown and debt ceiling can impact on the financial markets. Therefore, can you please explain us the US government shutdown and the debt ceiling issue?
Well, it's a very delicate time. If you look at the bigger picture, the debt ceiling, they have to scale it up. And also they have to fund the federal agencies. If they are not funding it, they will stop paying their bills. So first thing they are doing is to start funding it. And also scrapping healthcare. Republicans are controlling the Congress, as you know. So these are very sensitive decisions they have taken. They also has to increase the debt ceiling. If they are not increasing the debt ceiling also, it will have consequential impact in terms of the global financial markets. But there are contentious development between the Republicans and the Democrats. There has to be consensus, and they have to reach the following issues in conclusion. One, how we are going to fund the agencies. Two, when we are going to increase the debt ceiling, up to what period, up to what level. And again, last but not the least, they also have to go for development expenditure to stimulate the economy. These are integral part of the overall functional makeup. Then only they can see the long-term sustainable development will come. US tapering, which has been deferred now, will also have a say in the December meeting. Possibly there will be US tapering in December. That is also not ruled out. All these are integral part of the overall coin. And unless these issues are fixed, I don't believe America is recovering or global growth is back in track.
So in consequence of all these developments, how the global capital markets have performed lately?
Well, it's a highly volatile market. Just one single deferment has made the trick. Now, look at NASDAQ, 23%. It is the day when it was announced, it went to 25. Same story holds good for Dow Jones or again S&P, 19% and again 17% respectively. The global financial markets also responded to the quantitative easing programs not getting impacted, and there is no tapering. The minute Federal Reserve Chairman said this, you have seen the euphoria in the rest of the world. Again, if you look at the Brazil still holding negative 11%. UK market is up 11%. Germany is up 15%. Now you have election done today. Angela Merkel, she's back in track. She will have a coalition. That will also stimulate the market again. Political stability is there. You have seen France over 12%. Again, when it comes to Nikkei, it is almost 41%. China is 3.7%. When it comes to Hang Seng, that is a story. When it comes to India, the capital market is taking a beating. Now, because the interest rate hike has gone up, it has pumped by 0.25% to contain the inflation. The new central bank governor has taken the step. That's impacting the capital market. That is brought down by 2.7%. So, in essence, if you look at it, the positive news of deferment on tapering has contributed to the financial markets in positive respect.
And what about the regional markets, the regional capital markets, how they have responded to that?
Regional market again taken the positive story. We know the economic fundamentals of the region is good. Take Dubai, 64%, Abu Dhabi, 44%, Qatar, 17%, Kuwait, 32%. So there is a reflection across the market. Oman again, 16%. So the bigger picture is that market reflections are real, based on the US Federal Reserve announcement, which is going to be going upward, because people see that hot money will come, investments will take place in the local market as well.
And what are the new trends on the oil and gas sector?
Oil and gas, we have reflection. When the Federal Reserve's US tapering was deferred, Brent now is quoting 109, and WTI, NewMax is quoting 104. It could have gone up if there is a real, tapering. Then they should have scaled up, hiked the overall energy resources. But now it slowed down, and natural gas is 3.68, and again the natural gas stocks also coming down in US. So we have seen downward trend in the commodities.
And how the precious metals are performing?
Gold is 1325 per ounce. Again, silver is 21.6. So if you look at the dollar, where it gets weakened, the currencies will have a different reflection. Commodities will have different reflections. Now, gold will still continue to go down. In my opinion, it should come down to 1250. Perhaps even if there is a tapering next year, by this time you have an average price of between 1225 to 1250.
What are the latest developments on the GCC bond market?
GCC bond market credit default swap has softened. It's good news for the borrowing banks in the Gulf states. Now, if you look at credit default swap for Saudi Arabia is 62, and again, when it comes to Abu Dhabi, 65, Qatar is 69, and Bahrain and Dubai, if you look at 200 plus. But the bigger picture is more important. The region is strong, but the international investors will realize if there is geopolitical stability, then it will get softened. And so Syria war averted, then reflection we have seen. If there is any, again, political disintegration, then the reflection will be hiking the overall default swap rate.
And how the forex markets are responding to all this global news?
Dollar index has come down 80.23. When it comes to pound, you have seen 1.60. Again, the euro is becoming strong, 1.35. We have seen a reflection. I mean, again, when it comes to Japanese yen, 98.2. Japanese yen is equal to $1. These are triggered by the dollar. When dollar versus other currency, when you reflect, dollar index becomes weak, rest of the currencies gets stronger.
Thank you very much, Dr. Seetharaman, Doha Bank Group CEO.